Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about today is GBPUSD, which is one of the most traded pairs in the market. And I want to speak about it both from a practical perspective and educational perspective. So what I will be doing is giving you guys a full analysis on the pair, both from a technical and in order flow perspective. So first, we will be looking at the technical side of the market. I will then go and show you exactly what hedge funds are currently doing in the market. And obviously, if you're able to read what the biggest players in the market are doing, you can trade alongside them and obviously have an advantage over your competition in the market. And by the end of the video, not only you will have gotten some very good education from the analysis, but you will also know what kind of opportunities we can be looking for on GBPUSD to be capitalizing on the next moves of the pair. So without further ado, let's get straight in the video. Now, starting from the monthly, what we can see. Now, on the monthly time frame, we can see that the market has just provided this W formation. Now, in general, after a W formation, what you want to see is the market create a move to the downside to go and complete the pattern at the neckline, aka the previous resistance, now turn support, which is the completion zone of the pattern. And in fact, this is exactly what GBPUSD did. The market created the move to the downside, went and completed the pattern at the previous resistance, now turn support. And at that point, since this is a support area, the market rejected the zone to the upside, which is what happens most of the times. So at the moment on the monthly, we have a very clean price action with a market which is getting rejected from a strong monthly support area. Let's go down on the weekly and see what kind of situation we have from a weekly perspective. Now, also in the weekly, price action is very clean. We have a market which has created a nice impulse to the downside, followed by this correction, and then created this continuation to the downside and this lower low. At that point, what you have is a high, which is an area of resistance, which after the market has broken it to the upside, is turned support, because in the market, previous resistance, once it is broken, is turned support. So the reason for which the market is now getting rejected to the upside is because the market is currently rejecting an area of previous weekly resistance, which was turned support all across this area, and then the market currently is rejecting to the upside. What we also spoke about in our previous analysis is that the market had created this candle here. Now, this candle here, when you see a candle that is green and has a very long wick, which is at least the size of the body, what you expect is for the next candle to actually fill in the wick. Why do you expect the next candle to fill in the wick? Because if you see a candle like this on the weekly, what you actually have on the daily is most of the times an impulse in a correction, in which the correction is exactly the wick that you see here from a weekly perspective. And in general, after an impulse and a correction, what you expect is the continuation to the upside. And the continuation to the upside is exactly the next weekly candle, which most of the times fills in the wick, which is in fact exactly what we're seeing here. Because if we look at what is happening, we can see that the market had created this candle here, which is the candle which the next one is supposed to fill in the wick. And that is in fact exactly what the market is currently doing, filling in the wick of the previous weekly candle, exactly as we wanted to see. Going down on the daily, what do we see? Now, on the daily time frame, price action is very clean. We had spoken about GBPUSD quite a few times in the past. We had spoken about GBPUSD after the market had provided this M formation. In fact, I had made a full breakdown of GBPUSD explaining all the reasons for which from here we first wanted to see a completion at the neckline and then the continuation to the downside for the creation of a lower low, and that is exactly what the market did. Then I spoke about GBPUSD after this W formation, and I explained all the reasons for which from here we first wanted to see a retracement and then the continuation to the upside. And again, that is exactly what the market did. Then I spoke about GBPUSD after this overextended W formation, and I explained all the reasons for which from here we wanted to see the market create a nice move to the downside to complete the pattern at the previous resistance, not our support, and again that is exactly what the market did. Then we had this very strong impulse to the downside, and I made a full breakdown of GBPUSD when the market was here, explaining all the reasons for which first we wanted to see a correction to this supply, and then the continuation to the downside, and again that is exactly what the market did. Then we wanted to see the market create an inverted head and shoulders, and again that is exactly what the market did. And then we had a nice impulse and correction, and here we wanted to see the market create the continuation to the upside if we would have seen proper bullish price action from a 4-hour perspective. However, when the market reached this area, what we had is a market which continued to the downside and remained with a quite strong bearish momentum and broke all structure to the downside, so it was impossible to be looking for any kind of capitalizing opportunity to the upside. Then I spoke about GBPUSD after this W formation. I explained why we wanted to see first a correction exactly to this area and then the continuation to the upside, and again that is exactly what the market did. And the very last time that I spoke about GBPUSD was after this retracement, and I explained why from here we wanted to see the continuation to the upside, and that is exactly what the market is currently doing. And I will link all this previous analysis in the description, so you find everything linked below, so you can go and check out all this analysis for further education and obviously also reference. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a trading opportunity in next video. Now, at the moment, what is the situation and how we can be looking to capitalize on the next possible opportunity for GBPUSD? Why do I say next possible opportunity? Because with students, we are already capitalizing on this move to the upside. In fact, we're currently running a nice trade with a nice 1 to 3 risk to reward, and we are currently risk-free on the trade. So worst case scenario, if the market will just reject the top to the downside, this will be a break-even trade for us because we are already risk-free on the position. And currently we have the market which is testing the previous high. So what we have here is the probability of creating either a double top or breaking the zone to the upside. So how we will be approaching these different situations and how we can be looking for the next opportunity on it. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, what we can see is that with the last reports, net positions have been decreasing. In fact, we went from having a positive 12.7k net positions all the way down to having now a minus 17k net positions. So we went from having a positive net positioning to having a negative net positioning. So from having 46.5k longs and 33.8k shorts to now having only 27.8k longs and 45.5k shorts with a 19.7% long exposure and 32.2% short exposure, with 6.6k shorts added with the last report alone. So what we're having is massive shorting from an institutional perspective on GBPUSD. So what we can expect is very soon for the market to give us a rejection to the downside. That is why we are already risk-free on the longing opportunity that we found with students. So we are running in a good trade, which is currently providing good profit. However, we are very ready to either close the position or worst case, we will be break even on the trade. So the way in which we will be approaching this market is as usual being reactive and not predictive. If the market will break above this high and continue to the upside, then we will simply continue to run our trade risk-free, and we will have a nice take profit that gets hit, which will provide us a good capitalizing opportunity. On the other side, if the market will provide a double top here and melt to the downside, in that case, our trade will end up being either a break-even or a small win. And that will provide also a new pattern with a new opportunity. In fact, if the market will create this move to the downside, we will have the creation of this M formation. And in general, after an M formation, what you want to see is the market create a move to the upside to go and complete the pattern at the previous support, which is now turned resistance. So what we will be doing if the market will create this move to the downside is monitoring price action from a 4-hour perspective during this move to the downside. And what we will be waiting for is the market to shift from a 4-hour bearish market to a 4-hour bullish market. And only if the market will shift during this move to the downside to from a 4-hour bearish to a 4-hour bullish market, only at that point we will add GBPUSD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and completion of the M formation at the neckline, aka the previous support, now turned resistance. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.